All right, thanks for jumping on, guys. I didn't realize we had someone just mentioned in the Telegram that we had a red folder on tonight. So that for consideration, 12 a.m. So usually with the strategy, we don't trade 1 hour either side of a red folder, just due to volatility, due to you know, essentially price taking us out even before there's an opportunity to get into the market. So we do have a few new people that joined in today. Welcome. Thanks for being here. Thanks for looking into what it is that we do here on our live calls. The strategy is very simple. Like if you're unsure about what the strategy is, there's a video in the Telegram group under links. Go watch that. It's essentially the opening range breakout. So the strategy itself has been around for many, many years, but there is many, many different ways that people trade it. Okay, so I explained in the video how I trade it, and we trade it based purely on statistical averages, right? So we don't measure our trading or the strategy itself based on 1 day or 2 days or 3 days in a row of losing or 3 days in a row of winning, right? This is measured over a period of time. So usually a 30-day period is how I measure the performance of this strategy. And I've been doing so for many months now. Trying before I actually started a Telegram group, I decided to, go through the process, put a challenge together, to see if it was actually worthy of something that people should learn, right? So we went through a bit of a process. There was a lot of teething issues, right? It's a simple strategy that it happens the same time every day, whether it be Sydney or US seems to be the most effective, but happens both on Sydney and happens both on the US session, right? So there's two times a day that you can get into trade opportunities based on the opening range. It's actually one of the simplest strategies that I've used and taught over, since being in the game for like, eight going into 8 years now. Um, so if you haven't watched that video, make sure you go and watch that video. But the opening range is very, very simple. It's essentially waiting for the opening range candle on a at 11:30, which is our New York stock in our time conversion for Australia, Australian Eastern Standard, which is 11:30. I believe it's 9:30 for you guys. So we're waiting for the 9:30 candle to close. So it's 9:45 is when we then start looking for those next trade opportunities, right? So we look at gold and we look at US30. It seems to be the most effective on both of these. Is this strategy a win every day strategy? No, you've seen my results over the last 30 days. If you've seen past results, it's over the last 60 days. And even prior to that, probably 90 days of results. But every month has, based on the trades that I had taken personally, have shown, a good consistency. And the hardest thing with trading is a lot of people want to trade every opportunity that they can. They jump into the market, they force trades, they overanalyze. And I guess the best thing about this is you don't have to do anything like that. You don't need to overanalyze. You don't need to, wait for, certain things to happen. It's simply identifying if what the opening range is and identifying a range, which is, pretty much if we're in a range, we don't take a trade on the breakout of a range. If we're approaching a previous structure or a previous resistance or a previous support area, unless we're trying to take the break outside of the range. Okay, so the biggest thing here is identifying the trend. Are we in a trend? Are we about to reverse? Those are the two main things. And just pretty much drawing up the box that goes around the opening range. All right. So like I said, it seems like there's a lot of information, guys, but there really isn't, right? We just have a few set rules as to, whether or not we take trades, right? So it's not that every trade is a trade opportunity. Um, a lot of times there are, but there's also rules, right? You just stick to the rules and don't force anything. And if there's a opportunity to trade, cool. If there's not, then there's not. You come back the next day. And I guess that's the one thing with this strategy is that it does require patience because not every day is going to be a trading day. You'll wait and we'll get onto these calls and then you go, are we going to enter? And then we don't enter because it doesn't fit within the criteria of the of the orb strategy itself, or how I trade the orb strategy. But I tried to dumbify it in a way so that there's not too much thinking involved. You don't need to know Fibonacci. You don't need to know, moving averages. You don't need to know. I mean, all these additional things, could they help? Sure. But the idea of trading the orb the way that I trade is that you don't have to think too much. Can you identify a trend? Cool. Can you understand what a range is, right? Can you understand candlestick analysis? Like just very basic stuff to do that. So should we trade tonight? If we're actually following the rules, and as per what I recommend with you guys, if you're following the rules for the orb strategy, you don't trade an hour either side of the orb itself. Usually because like this, sometimes you just don't have any volume in that opening range candle to all of a sudden you get massive volume and goes this way, then all of a sudden goes the opposite direction and it is what it is, right? So we'll just monitor it for this first to see how it goes. But like I said, 12 a.m. So in 20 minutes, there's red folder news, which you should start to see some movement. But if we're looking and we're analyzing where price is currently right now, we've essentially peaked out at 3,500. We then changed structure here at 3,491. And based on that, our internal opening range here is between a 3490 resistance. You can see previous structure here, and roughly a 3475 support, right? So we're in the internal part of this. Usually we don't trade the internal part of this. Why? Because at 3488 or 3489, we're within 20 pips of the next structure, of next resistance, right? So Bartho asked, why didn't I trade last night on gold? And it was mainly I wasn't really focusing on it. I just looked at both and saw that US30 had a good time to get into the market as it was looking to reverse. And gold essentially, when I look at it here and I saw previous structure here, I'm like, well, that's our opening range, and we got previous structure here, which means probability, unless we get and close over this area, we're most likely going to reject and head back down, right? But the overall market was still very much bullish. So in this sense, if we're trading with the trend, right, even though we understand what the orb candle is, opening range candle, we still want to trade with the trend, right? The probability of the range happening and then breaking out with the trend is always going to be in your favor versus trying to pick if we're in a reversal. Are there points where we're in a reversal and price is correcting? 100%. So yeah, so I didn't take this because we're at previous structure, and then I was already in US30, which was here, which we were heading, and roughly in that area here, we were pretty much at a support area. So at a support area, it's either going to break the support and head down further. Cool. I would have taken that trade down, but it broke to the upside, so I took the long back up. And obviously targets are previous structure. So with our current candle where we are right now, if we're looking at this, it's at 45,133 it's already over the threshold, right? So also another rule as per the orb strategy, we don't want to take trades that are larger than 100 pips, right? It's just risk is too high, reward is high, but also risk is high, right? So it's just volatility in the movement of the candle itself. So here as well, on this candle, we've got roughly 3,479 to 3,488. So it's pretty much within 100 pips, right? But like I said, 12 o'clock, we have news. I don't recommend trading it, but if you want to trade it, it is your money. It is up to you. I cannot say don't do what you're told. use grown up and able to make financial decisions on your own, regardless of what I say. Okay, but just consideration of if you're going to take a trade around news, around a red folder, be prepared that sure, it could go in your favor. Sure, you could make good money of it, but we're not trying to win one hit wonder trades here. We're simply trading based off rules and statistics, not trying to get rich quick off one deal. Okay. So automatically, if I look at this and I go, okay, well, US30 has already, 45, 131, 49, we're way over 100 pips already move on that opening range. So risk factor is going to be a lot higher, but based on where price is heading, if we were going to trade US30, we look at the higher time frame, it looks like we've pretty much pushed down into this area of imbalance. So, um, I mean, it could still go either way, right? As we've created imbalance here, we've touched now this imbalance here, so we could go to the upside. We could still further continue back down. So trading an opening range candle would essentially mean we're trading a breakout to either side of this. So that is a 4 hour time frame, so it is quite high. We have imbalance here that looks to be created and may continue to maybe an area where price may retrace to. We do have resistance here as well, where price may get held as well. So already the targets for from where we would, target a trade out of this is already less than 1 to 1. Another thing, um, depending on your win rate using this strategy, ideally we're taking 1 to 1 trades, guys, but most of the time, there's going to be days where it's like just under 1 to 1 or just, it's for me, I'm always targeting previous structure. Why previous structure? Probability of breaking through a previous structure is not going to be as high as you'd like it to be. So lock in profit. If price is going to break out and continue past that area, cool. If you feel the need to take another entry, that's totally up to you. But on the basis of how I've traded this uh, for many, many months now, yeah, if it's 1 to 1 and it's good, it's a good setup and there's no noise between that next structure, cool, you take the trade. If there is noise and you don't want to take the trade, don't take the trade. It's not about being in a trade every single day, just because we have the opening range, right? It's more about still finding good setups and not getting caught. Not getting caught. So what is that? Yeah, so now we're essentially 79 and 89. We're at 100 pips now on this candle here. What's the overall direction for gold? Still very much wants to be bullish, right? We're in a uptrend, right? So ideally, we're looking for buying momentum, right? If we're going to trade this, we'd be looking to buy out of here. News.
What
That's
the
that's
fuck?
that is the only thing to consider here, guys. News. Red folder. Um, After that, I mean, if this candle, well, both of them really, both of them are over 100 pips. If we're simply following the rules, we don't trade it, right? Um, so what's your thoughts, guys? Give me something. Trading, not trading, voting here, voting with each other's money. I vote that everyone trades. I vote that nobody trades. It's okay.
Not trading.
Hey,
Everyone's always too scared, so I'll say not trading.
not trading. It's okay. But hey, we'll stay on. We'll watch it, see its performance. But yeah, like I said, it's it's 11:45 now, so this is our opening range close. So if we were going to target a long on gold here, this would be our trade. That's our next structure to that area there. So who's risk taking? There is the break now. So the break of that structure here, that's our first target at 4999. A little bit less than 100 pips, but again, can it Can it finish the trade before that? That's the question. Does it get held? So
It's tempting, but steer away.
hey, it's tempting.
Yeah.
You thinking about it, Fernando?
No, no, no. Already not trading it because it has happened to
I
me before.
mean, this here was a nice flip candle on that opening range, right? We had uh, quite a bearish push here, and then we flipped to continue bullish, right? That's a liquidity grab here, for momentum to continue pushing us back up. Is it going to happen within this same 15-minute candle? That's the question, right? If it does, cool. There is, that's a lot of quite a lot of pips to gain off that, but also risk factor is just high, right? And US30, let's go back here. Right, so we're looking at US30. Uh, 40, yeah. So break of US30, gold bullish, US30 bearish, news in 13. Let's see what happens. Um, there. Oh. I just missed the chat here. Hi, Jason. New here. Been following you since crypto calls days. Just curious, what happens if the range of the 15-minute open is quite large? Would you still put your stop at the ends of the large range? Yeah. So, um, Henry, the opening range candle, like just as part of the rules that I've been just back testing, forward testing, trading for the last many months now. Anything over 100 pips, your risk factor just goes quite significantly high. So we don't tend to trade if the opening range candle is over 100 pips, unless you feel the need to, and you can, still run a 1% at that 100 pips, right? So it's not something that we usually trade. Usually, ideally a opening range candle is something between, 40 to 70 pips. 50 pips is good. Like it seems to be a lot of the time is like 50 pips. Um, that's usually a decent opening range. But, when we're talking about risk on any of these trades, like especially if you're just starting out, you're just starting to learn and get into the habit as we do these live calls. Um, yeah, I mean, calculating risk, we, 1%, 2%, 3% if you must, but 1 to 2% is kind of an average across the board. But yeah, see, if we're taking this based on the rules of an opening range candle, and that's 100 pips. We're picked up and we're in the trade now. So usually when we're on these live calls and we're looking for these setups, if we're not taking trades in the initial setup, we're usually waiting for price to, if we've got previous structure. And this is why if our opening range is, just say it closed here and it's within 20 pips to the next structure, and we're not actually taking profit at that structure, then there's no point taking the trade either, right? This is where traders get caught out. It comes into here, comes back down, hits your stop loss, but then later on comes back out and then continues up from here. So for us, it's if we're looking to take it, and this is if we don't have news, if we're looking to take a trade that's breaking outside of the range, regardless if it's top or bottom, and price, the opening range candle closes somewhere below that range, it's not until price rejects and starts to come back up that we'd consider buying back into buying back into that breakout, right? It's always going to be risky if you're trading a internal range past a external range. So that ideally, when we're looking at setups for the opening ranges, our entries are going to come beyond any kind of range that we're in. Or if we're trending and the market's going like this, obviously it doesn't really matter. If just say that was our opening range candle here and we had previous structure up here somewhere, then cool, we'd take that trade, at least 1-to-1 to that previous structure or below, right? Wherever we're targeting, and I found that over time is that when I'm targeting beyond a rejection area, probability is not in your favor, right? It's always been, you can be in an internal part of a range, but if this is your opening range candle, even if it's small here, that is always going to be your first target, right? Whether it be you take partials here and price continues up and you adjust your stop loss to your break even, or, your break even would be down here. But it's always going to be your first target. Why? Because we want to lock in profit, right? It's people have this focus too much about, it has to be a 1-to-1 trade, at least, or 1.5 or 2-to-1. Over the years of trading crypto for so long, and it being, huge emphasis on risk reward. Yes, that is true. Having good risk reward is going to be better for you long term, but also having a high win rate can make you profitable in many strategies, right? And I found with this opening range strategy that your win rate is, going to be quite high, but your losses are going to be quite low as well, if you're using it correctly, right? And when I say that, I'm talking about targeting those previous structures, not trading within a range, trading with the trend, right? Just the basics of technical analysis where most traders look at the opening range and go, okay, well, I'm just going to buy the break without any consideration. So the strategy itself is very basic, but it's just, do I take the trade? Do I not take the trade? Tonight we have a rule. If it's over 100 pips or there's a red folder, we don't trade 1 hour either side. If we must, if we feel the need, risk is 1% always. Like if you can calculate risk back to 1%, that is what we do. But other than that, yeah. Other than that, here is US30. So if we look at the opening range, right? So opening range was that candle, right? If we just trade based on breaking an opening range, we probably would have got picked up here and flipped on the opposite direction. Here, we probably would have taken a double flip. But again, over 100, what is it? 130, 180 pips, like its risk factor is quite high. We got 5 minutes to see what happens here. If that's pushing hard, we should expect gold to head down from here. And we are waiting on 4 minutes 29, forecast 49. Actual greater than forecast is good for currency. All right, so remember when things are good for currency, they're bad for gold. So they're expecting it to be 49 and it is 49 or beyond. Then we should see gold drop and we should see US30 pump. In 4 minutes. Another news, BTC. BTC dropped to 108.41. Is that? No, that's not even a recent. We got to 107 before correcting. Multiple changes here, structure change here. That's cool. And well, look at that. Big bottom trend, big trend on BTC. You can see it heading down. Right now we've got structure change here. That's good. Good initiation for BTC. Yeah. That's going to be the turning point here. All the way through. Good old classic break and retest candle flip. Ethereum. Ethereum also quite a strong downtrend. Usually when prices trending down, you just look at the higher, most recent external areas, right? And then this is quite a significant downtrend. Your trend flips and changes once you start breaking these higher reversal points. So good hold for BTC at a, let's zoom out, at a huge area, right? So still very much bearish. So from that top, I should pull up. I mean, really, it's still very much bearish until we break back over here. But it'll stage. We'll just have to see what happens. 2 minutes till news. XRP. Finding that support. Last minute. Okay, let's see what happens. And we've got gold here.
I must admit, Jace, you have a way of making the chart look a lot simpler than other people.
Yeah,
Just the spacing and the size. I don't know what it is. It's just, yeah.
yeah. No, I've seen a lot of noise over the years, and even myself just tried to clutter it and put so much stuff in it. But I think like I just get a clearer vision when there is less noise on the chart. So what did we get? Okay, so 48.7, so less than, right? So less than forecast is not good for currency. So gold should go up and US30 will hover for a bit. So we should have a, yeah, well, now we're looking at it. We should actually come through and touch that 1500. That didn't really move anything too much. US30 moved decent, nothing too crazy. That sounds. Oh, no. So this is an example of a not a one-to-one trade based on where structure is. This is, you know, 498 45 is um, obviously where our target would be based on a previous structure. Momentum is very much bullish, but your risk reward is quite bad based on their opening range, right? So this would be, if I'm going to trade this, I'm trying to force a trade to push something into where price is expected to go, right? Um, based on where I think it will if we break this structure here, right? We pop out of here, we should naturally continue back up to the top of this range. But 0.38, we're kind of like forcing the trade, right? Like we want to find good trades, we want to find good quality, not get into the habit of just like it's going to break out and then target this area. Is this a good trade? The probability is high that it's going to go there, but it's a bad trade, right? This is where we mess with the why mindset and why psychology of trading screws many traders over is because you're I mean, and people go, okay, well, why don't you just have your risk reward really tight and make it one-to-one? Cool. And then you're changing the strategy again and you're not actually trading the opening range breakout itself. Because from here, what does it really take for price to grab your stop loss? Well, if it struggles to break through here, what is the first thing that price does? Look for more liquidity, even though the overall trend is bullish. right? So you can't have your stop loss too tight on the off chance that we can't break through this resistance. So in saying that, that is your risk and that is your reward based on a 3,500, psychological number. There should be a sell-off around here. There's even prior multiple sell-offs beforehand. So I can't recommend trading tonight, guys. There's nothing to force or anything to put through. So the next part from that would be let's just have a look tomorrow morning, right? If we're in this trend and we continue to maintain momentum, we might have a strong trend by tomorrow morning. And why I say strong trend, I'm essentially saying continuation of trend because as we looked at the bigger picture since you know, this whole squeeze where prices coming into here, lower highs and higher lows, we eventually got the break and that change of structure here. And, we're going to continue momentum up, then there may be something tomorrow in Sydney. If we break 3,500 tonight, then yeah, we're pushing into that new territory, right? So will be interesting to see, but I can't advise on taking a trade to force it based on what our actual strategy is. So US30 is the same. The opening range candle, the flip itself. The flip on here, if you did get picked up by here, you're probably breaking even right about now anyway. For the new guys, the flip candle the flip is essentially if price does this to you, right? So we have our opening range candle and you enter a short here and then the market flips against you. We essentially, if we're using 1% risk, as we should for all the trades, the max we use on a flip is a 2% risk, which means we double down on the flip to counteract and trade it back up. Right. So it's always going to be depending on where the market is, right? If we're trending down, the flip itself, right? So we usually I find that where I get caught out on these trades is actually when I'm counter trend trading at opening range, right? So essentially we'd be getting, trading against the trend. So usually the counteract is price comes out this way first, doesn't quite hit take profit or comes out just a little bit, and then I take the flip down and I enter my two positions here to trade it back down. Why? Well, I'm trading with the trend. So if I got picked up a little bit here, I'm only risking the same twice as much as what I did here, which should be 2%, to then trade that back down. Then if I lose that as well, then I'm out, right? Haven't lost the flips yet. It's more of knowing when to take them if the initial trade was against the trend. Like I said, even in saying that is trade with the trend only, right? Can you use this strategy to, jump on once a day, morning and night, and look for only trades that break out to the upside or the downside if that's the current trend? Yes, 100%. Right? You're going to have a higher probability of making money. Is it possible to get this strategy wrong and lose 4 times, 5 times in a row? Yes, it is also possible. We had that in our very first challenge. The first 4 trades was losing trades, right? Until we actually had a win. And it's kind of like, man, like I was just come off having, 2 losses and 3 losses in a month. So then the first time I open up for a challenge to bring people in and learn about the strategy, we had multiple losing days. All right. It is, I mean, that's trading. You can't always predict it, but then when you fine tune it, right? And the thing with the orb strategy is about fine tuning it to find statistically what is working for you and what is not working. And look at that, straight up peaked it, right? So even probability continuing up to that area, risk factor is just Yeah, it's not good, guys. What is this? Overall bullish, market momentum bullish. The news release, bad for currency. When things are bad for currency, what tends to happen for gold? Gold goes up. Why? Because people shift currency from US dollar over to gold, until something good is about to happen with the US dollar and and it's good for currency, then okay, we shift from gold and we go back to US dollar, right? That's the way that it tends to work. Is it times where gold goes up and US goes up? Yes, it happens as well. But usually there's a delayed offset to one flipping in the other opposite direction. So that is all for tonight, guys. I don't need to spend any more time on going through why we don't take this trade, what to look for. Tomorrow, like I said, for tomorrow, we're going to get over 3,500. We're pushing into new territory. So if we're, heading where we are in this 8 o'clock range, looking for a breakout for continuation up, cool. You're We're at all-time highs, so just keep that in mind. And US30 will obviously depend on what's overall happening here. Huge imbalance, pretty much snatch grab coming back up. We've got imbalance here. So there might be a trade tomorrow morning in this, looking to target this area, or further continuing back down. But again, always keep in mind previous structures. Look at targeting your previous structures for when you're locking in profit, even if it's partials, right? Previous structures for at least partials just means you're locking in profit for this particular strategy. So that is all, guys. Hope you have a great morning, night, evening, and I will see you guys tomorrow.
Thank you, Jace.